The cryptocurrency market is buzzing with the rise of Bitcoin ETFs, but what makes them so revolutionary? A Bitcoin ETF, or exchange-traded fund, allows investors to access Bitcoin without directly owning it, blending the world of traditional finance with digital currency. Experts believe this could bring unprecedented institutional adoption, inject liquidity into the market, and legitimize crypto like never before. But could there also be risks hidden in this innovation? In this video, we'll explore how Bitcoin ETFs could reshape the crypto landscape, the benefits they bring, and the potential challenges ahead. Today, we will talk about how Bitcoin ETFs could change the crypto market forever. So before we get started, make sure to hit that like button, also subscribe to my channel. How Bitcoin ETFs could change the crypto market forever. Bitcoin has often been described as revolutionary. It's decentralized, borderless, and has given rise to an entirely new financial ecosystem. But as transformative as Bitcoin has been, it has struggled to break into the world of mainstream finance. That's where Bitcoin ETFs come into play. Imagine a world where Bitcoin is as accessible as buying stocks in your retirement account. A world where institutional investors, pension funds, and even casual traders can invest in Bitcoin without worrying about wallets, private keys, or the technical hurdles of crypto exchanges. Bitcoin ETFs could make this vision a reality, and their impact could fundamentally reshape the crypto market as we know it. In this video, we'll explore how Bitcoin ETFs could change the game forever. We'll dive into what they are, why they matter, and how they might alter the future of crypto investing. Stick around until the end. You won't want to miss the implications for investors and the market as a whole. What are Bitcoin ETFs? Let's start with the basics. Bitcoin ETFs, or exchange-traded funds, are investment vehicles designed to track the price of Bitcoin. Rather than owning Bitcoin directly, investors buy shares in an ETF that mirrors Bitcoin's performance. These shares can be traded on traditional stock exchanges, just like shares of Apple or Tesla. Why does this matter? For one, Bitcoin ETFs eliminate many of the challenges associated with owning Bitcoin. You don't need to worry about securing a wallet, remembering a private key, or navigating the complexities of a crypto exchange. There are two main types of Bitcoin ETFs: spot ETFs and futures ETFs. Spot ETFs hold actual Bitcoin in reserve, providing a direct correlation to its market price. Futures ETFs, on the other hand, use contracts to speculate on Bitcoin's future price. Each type has its pros and cons, which we'll discuss later in this video. The problem Bitcoin ETFs aim to solve. Bitcoin is often celebrated for its independence from traditional financial institutions. But this very quality can make it intimidating for new investors. Think about it. How many people are comfortable managing a digital wallet or safeguarding a private key that, if lost, could mean losing their entire investment? Bitcoin ETFs address these issues by offering a more familiar and user-friendly way to invest in cryptocurrency. They remove the need for technical expertise and provide a regulated framework that instills confidence in both retail and institutional investors. Additionally, Bitcoin ETFs aim to solve the liquidity problem. While crypto exchanges operate 24/7, traditional markets have set trading hours. By offering Bitcoin exposure on these platforms, ETFs make it easier for investors to buy and sell without worrying about market hours or exchange compatibility. How Bitcoin ETFs are reshaping accessibility. Accessibility has always been a key barrier to Bitcoin adoption. While early adopters and tech enthusiasts have embraced the cryptocurrency, the average investor often feels left out. Bitcoin ETFs could change that by lowering the entry barrier. For instance, let's say you're a beginner who wants to invest in Bitcoin. Without ETFs, you need to choose a crypto exchange, set up a wallet, and navigate the volatile world of digital assets. But with an ETF, you can gain exposure to Bitcoin with just a few clicks. This accessibility extends to institutional investors as well. However, regulation is a double-edged sword. While it adds credibility and attracts institutional investors, it also imposes restrictions that could limit Bitcoin's potential. For example, the approval process for Bitcoin ETFs is notoriously stringent, with concerns about market manipulation and lack of oversight often cited as reasons for rejection. Despite these challenges, the growing demand for Bitcoin ETFs suggests that regulation is not a deterrent, but a necessary step toward mainstream adoption. Why institutional investors are excited. Institutional investors are a critical factor in Bitcoin ETFs' potential to change the crypto market. These large-scale investors, including hedge funds, pension funds, and mutual funds, control trillions of dollars in assets. For years, institutional investors have been hesitant to enter the crypto space due to its unregulated nature and technical challenges. Bitcoin ETFs solve these problems by providing a regulated, secure, and easily tradable option. Imagine the impact of just a fraction of institutional capital flowing into Bitcoin through ETFs. It could lead to massive price surges, increased market stability, and broader acceptance of cryptocurrency as an asset class. Spot ETFs versus futures ETFs. Understanding the difference between spot and futures ETFs is crucial for evaluating their impact. Spot ETFs directly hold Bitcoin, providing a one-to-one correlation with its market price. They are often seen as the ideal option for long-term investors who want accurate exposure to Bitcoin's performance. Futures ETFs, on the other hand, are based on contracts that speculate on Bitcoin's future price. While they offer similar exposure, they come with additional risks like contango, where futures prices exceed the spot price. This can lead to discrepancies in returns over time. Both types have their place in the market, but the approval of spot ETFs is often seen as the holy grail for Bitcoin adoption. The ripple effect on the crypto market. The introduction of Bitcoin ETFs doesn't just affect Bitcoin. It has a ripple effect across the entire crypto market. For one, the increased legitimacy of Bitcoin could boost confidence in other cryptocurrencies, encouraging investors to explore altcoins and blockchain projects. Moreover, the growing popularity of ETFs could lead to increased competition among asset managers, driving innovation and lowering fees for investors. This could make crypto investing more affordable and accessible to a wider audience. Criticisms and concerns. While Bitcoin ETFs have been hailed as a game changer, they are not without criticism. Some purists argue that ETFs go against Bitcoin's core philosophy of decentralization. Others worry about the risks associated with ETFs, such as tracking errors, management fees, and the potential for market manipulation. Despite these criticisms, the growing demand for Bitcoin ETFs suggests that their benefits outweigh their drawbacks for most investors. How Bitcoin ETFs could impact price volatility. Bitcoin's volatility has long been a concern for investors. While it has created opportunities for traders, it has also deterred many from entering the market. Bitcoin ETFs could help stabilize prices by increasing liquidity and attracting long-term investors. When more investors buy into ETFs, the underlying demand for Bitcoin increases, potentially smoothing out price fluctuations. Additionally, the ease of trading ETFs could encourage a more balanced market, where both retail and institutional investors play a role in shaping Bitcoin's price. The future of Bitcoin ETFs. Looking ahead, the future of Bitcoin ETFs appears bright. As regulators become more comfortable with cryptocurrencies, we can expect to see a wider range of ETF products, including those tied to other digital assets. The approval of spot ETFs, in particular, could mark a turning point for the crypto market, opening the floodgates for institutional capital and driving broader adoption. Moreover, the success of Bitcoin ETFs could inspire innovation in other areas of finance, such as tokenized assets and decentralized ETFs. Bitcoin ETFs are more than just a new investment product. They are a catalyst for change in the crypto market. By making Bitcoin more accessible, regulated, and appealing to institutional investors, ETFs have the potential to reshape the way we think about cryptocurrency. Whether you're a seasoned investor or a curious beginner, understanding Bitcoin ETFs is essential for navigating the future of crypto investing. What do you think of our video? Let me know in the comments section below. Before you go, please hit the like button and subscribe to my channel. Thanks for watching.